Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about the week's news and topics in business, finance, taxes, accounting matters, or none of those things, just things that came up of interest to us. But what they always are topics that are discussed from the perspective of accountants. And today we've got three accountants. I'm Ty Carr, and with me today is Tammy Hess.
Hi, everyone.
And Charlie Zigman.
Thanks for joining.
And our topics for today: California wants overtime to start after a 32-hour week. Then we're going to look at some tips from Accounting Today for avoiding a tax audit. Then we get to bring up our favorite character, the guy we talk about a lot here, Elon Musk, forced to admit he did wrong and pay fines by the SEC bastards. His words, not mine. Then toxic work culture. Is it the primary issue for why people are leaving jobs? Or is it pay? And then back to Elon. What's he up to with Twitter? All right, well, let's kick it off. We'll start out with Charlie.
All right. I've got an article we can talk about from Yahoo Finance. It's called "California Takes a Giant Step Toward Making the 4-Day Workweek Dream a Reality." And so there's a bill being proposed in legislation. It's called AB 2932. It's getting introduced in the state assembly, and the goal is to, it's got a couple of different things written in there. The first one that they mention in the article is that it's going to lower the maximum threshold for overtime pay from 40 hours a week to 32 hours a week for companies with over 500 employees in the state of California. And it talks a little bit about why that is. It says, there's a quote that says, "We've seen over 47 million people voluntarily leave their jobs for better opportunities. We're seeing a labor shortage across the board from small to big businesses. And so it's very clear that employees don't want to go back to work the normal or the old way, but it's time to rethink that and get it into something better." So I read the bill in a little more detail. And one of the things that kind of, to me, seemed like a big deal is that they mentioned in there that the way they want to structure it is that they want people to be able to work 32 hours, but they need those people to make the same amount that they used to make in 40 hours. And so at least the way that I interpreted it, it seemed like I don't want to say ridiculous, but it seemed like a pretty big ask to try to just go ahead and give everybody in California basically a 25% raise is kind of what it boils down to. It talks about a couple of different things. There's a lot of opposition to it. The new California law is unlikely to pass the state house, and the California Chamber of Commerce has added it to its job killer list. But then there's a couple of other points where they say, well, there's somebody that they talked to in Fortune that said folks felt like they were getting the same amount of work done, and that 91% of the team reported feeling happier as a result of having moved to a 4-day work week. And so I guess on the one hand, from my take, it seems like it'd be nice to have a 4-day work week, but I don't think the way to achieve it is to just say that all employers must pay everybody according to that same rate, basically to give them 40 hours in 32. It just seems like that's a little short-sighted. And so I want to get you guys' take on, do you think this bill is reasonable, or is there maybe another approach that businesses could take towards getting people into a better work-life balance?
Yeah. I thought the article was interesting. I did like the way it ended, where it says that, a few employers that they talked to said the question they're asking is not that it can't work, but, could it work for us or for the business? And I think that's a big key point, because when I first started reading that, the article, a lot of times if you're having service providers or people who are not salary, they're hourly, and you're trying to figure out how that all works out. And so not only are you reducing the amount of time and maybe adjusting the rate so they're getting paid as though they're working the 40 hours, but if there are cases where they're going to work over the 32, are they going to get time and a half for those additional hours? And that can be really costly for a business. And so I think it, rather than coming through from a bill perspective, it really is thinking about it from a business perspective as how can you be more flexible and offer alternatives for your current worker force, because I think that's going to be the key thing. And there are going to be some businesses that it doesn't make sense to, they aren't getting more work done in a shorter period of time because they're interfacing with clients, or they're, on the line working, and they're really, it's an hour by hour job type of situation where the hours are needed. So how do you facilitate that? And most likely what that would end up being is that you're going to have to split that between two employees versus doing it just on the one employee if you're trying to keep a lower minimum threshold of 32 hours a week type of situation. So I think it causes more kind of questions and discussion points than a fast track to go ahead and get it approved. But it does seem like it's not going to approve, like based on what you said, Charlie, and what the article stated as well. That's probably unlikely, but it's an interesting thought, I think, but I don't know if it could actually be successful in the way that's currently written. What do you think, Ty?
Well, I think it's mostly an inappropriate thought for government, like in the sense of if they couch it as the issue being that employers are having a hard time retaining workers because workers don't want to go back and work as many hours. And, why does the state of California need to get into that issue? Right. I mean, that's the businesses should figure out for themselves what they have to do to pay and retain employees. And so I don't buy that that's their issue. I think their issue is, I think that their bill will be more successful. The promoters of this bill would be more successful if they didn't try to disguise themselves or couch themselves as doing something to benefit employers or the business community, and instead admitted kind of where they were coming from, which is they want a higher minimum wage. I mean, paying people for 32 hours equivalent to what they would have made for 40 hours is the same thing as saying we're just paying people our higher rate per hour. So, if that's their agenda, then just stand behind that agenda, that they want a higher minimum wage that allows people to work only 32 hours and make the same kind of living that they might have otherwise lived, fine, and that'll either the people of California will either go for that labor side agenda or they won't, right? And then I think the other part of it, I think also they can stand behind the other part from a labor standpoint as well. If they basically want to take a pro labor stance that time and a half should be paid after 32 hours, great, take that stance, but kind of admit what you're doing and where you're coming from. I think probably has a far better chance of passing. I mean, probably doesn't have a chance of passing either way, but confusing people by trying to couch it as you're doing something to improve the business environment is, I think, just confuses the issues, because no business person hears this and thinks, oh, thank you, state of California, for kind of trying to help me retain employees. That's not a reasonable kind of thought process from for the promoters of this bill to expect the business community to adopt. I think there is another side of it. I've at times been in favor of raising the minimum wage, and I think if you want to make a more complex argument on the basis of, if what the promoters are really saying is, look, we've provided a lot of state benefits to people. Both the Fed and the state of California, we've basically incentivized people a lot to not work, and getting them back to work isn't working when they would have to work a full 40 hours to make a living. So we want to force employers to pay people a higher wage at 32 hours and pay overtime past 32 hours. And the reason we want to force employers to do that is to get people off the government doles. I think that's another pretty good argument for it, right? I have supported raising the minimum wage essentially on that basis in the past. I don't think I would go this far on that basis, but it's a rational basis. I mean, the reality is that a low minimum wage ends up being, a minimum wage that is too low. I do support the theory that a minimum wage that is too low is basically a source of corporate welfare, because what you're doing is you are subsidizing a workforce that ends up working jobs for large companies that don't pay a livable wage. And so you're basically subsidizing you're helping create a workforce that that is available for those jobs only because they're able to live by subsidies coming from the government, right? So you're indirectly subsidizing companies that way, and so I don't particularly like that scenario either. So I can see making that argument in this case, but it doesn't sound like they really made that argument. They just kind of tried to co-opt. They tried to put on the clothes of being kind of in the business community camp and trying to help employers, and it just feels just way too Big Brotherish to be comfortable for anyone.
Yeah, I agree completely. I think it'd be interesting to just watch this one flounder out and see what comes of it. So yeah, do you have another article we can talk about, Tammy?
I do. So by the time this episode airs, the 2021 tax deadline will have just passed. However, if you filed an extension or if you're planning ahead for next year, Accounting Today posted an article this week on things that you could do to avoid being red flagged for an audit. So the first one is simple typos will generate a red flag. So some common mistakes were transposing numbers, typing in the wrong line, or amounts not agreeing to 1099s or W-2s. So take the time to double check your work. Number two, using large rounded numbers may generate a red flag. It could lead the IRS to think that you are using estimates or that you don't have the support to validate the numbers. In addition, multiple years of low revenues or losses could cause the IRS to wonder if this business is legitimate. Maybe it's a hobby, which doesn't have the same write-off rules as businesses do. So make sure you're not using those rounded large numbers. Number three, exaggerating your home office or charity deductions. So with many of us working from home lately, we may be tempted to allocate a portion of our home expense as an office deduction. However, most employees do not qualify for the home office deductions. If you think you do qualify, double check the rules and limitations for calculating the deduction. And the similar kind of thought of for the charitable deductions, if they're unreasonable, they can often lead to red flags. So it's important just to remember that you need documentation from each charity for donations over $250. So just kind of keep that in mind. Number four, with cryptocurrency on the rise, it's a hot topic on tax returns. If you state that you have not made any sales or exchanges of virtual currency and there is evidence of you doing so, it's going to be a red flag. If you state that you have, but don't report any values, this will obviously be a red flag. And in addition, if you have large cryptocurrency transactions, the IRS may just take a closer look at your returns anyways. So kind of keep an eye out for those types of situations. Number five, if you receive the advanced child tax credit payment in 2021, just ensure that you reconcile the amount received to the allowable credit that you've earned. So failure to do so may generate a red flag. And number six, since more people are eligible for the earned income tax credit, there has been more reviews in this area in the past year. It was reported that more than half of the correspondence audits in 2021 were related to the returns with gross receipts of less than $25,000 and claiming the earned income tax credit. So to avoid an audit, just ensure that you meet the criteria to take the credit and take a second look to ensure that both earned income and investment income fall under the limits set by the IRS. The article does close with a reminder to those who are filing extensions. Filing an extension only gives you more time to file a tax return. It does not give you more time to pay. So ensure that you pay for what you think that you will owe by April 18th. And so granted, these tips I thought were really helpful. I don't know if you guys could think of any more, or if you had any suggestions, if those who are listening today, when this is actually being aired, if they've missed the deadline, what they can do.
I think those are all really good tips. I'm not sure I have any more sort of overly general suggestions. I would say that one of the things that I'm always looking at when I'm looking at clients and trying to figure out if they've kind of finished everything is I'll try to look at the trend. I'll look at their balance sheet in multiple years and I'll ask myself, are these balances changing over time? If it's a loan, is it performing? Things like that. And so I think that basically looking at how your figures have evolved throughout multiple years can help give you a feel for how that would look from the IRS's perspective. That often isn't enough on its own because a lot of times those things are stagnant for reasons that have nothing to do with that. But yeah, I think it's a good place to look. I think the part about the rounded out amounts, I don't know, a lot of things naturally just happen to have round amounts. And so it's a little bit weird that would be a trigger, but I get what they're saying. I think ultimately, if you're trying to back your numbers, don't worry about if they're round, worry about whether or not you can support them. And to me, that's the more meaningful thing. And certainly don't be afraid to use round numbers when they're the correct numbers. But yeah, those are my thoughts. Other than that, I think it's good advice in the article. And I just want to say the last thing is that I agree that penalty to not pay is a lot worse than the penalty, or I'm sorry, the penalty for not filing is a lot worse than the penalty for not paying. And so you should get filing in order and then pay as much as you can and deal with the rest after the fact. But what do you think, Ty?
Yeah, I think those are a good list of things to consider in terms of what could trigger an audit. I mean, look, at the end of the day, I don't think it's not worthwhile to, you're not going to choose to not take a deduction or to not take a credit that you qualify for just because it might be a audit trigger, right? And so, it's kind of interesting when you think about these lists, because it's like, well, you could sum it up by saying, make sure you have the proper documentation and substantiation for the deductions and credits you take, right? Because then it's like, well, these are the things that could trigger an audit. And if you assume what I just said, that of course you wouldn't, if you actually qualify for these things and you have the supporting documentation, you're going to take it. You're not going to just leave it off to avoid an audit. So then it's like, well, who's the list for people who maybe are trying to take something they shouldn't take, and to remind them that these are, if you're doing it in these zones, you're more likely to get audited. But I think, it is a good list. I mean, I think the reality is, I just say that kind of facetiously, because we know, I mean, the list is for all of us, that we all worry about the possibility, and we like to have the heads up of, maybe I am running more risky. And even if there's nothing I can do about it, just the heads up that my return might be at a higher risk is something that I think most of us as taxpayers would like to know. And so what I would add to that list, and what I would point out, kind of the nature of what's in that list, is that the IRS has an algorithm that is done by computer, which is what they refer to as the diff score, which is actually looking at a combination of large differences in tax returns from one year to the next, as well as some very kind of specific things that would be flagged issues. And we don't know what goes into that algorithm. It's top secret, right? But as outside analysts and people like who write these articles and things like that, we can make educated guesses about what would be in there. And we can also see kind of where there's a lot of audit activity, which suggests what might be in that algorithm. And so a lot of those things that are on that list would be things that we would suppose are probably in that algorithm, like taking home office deductions, large home office deductions, or having, we certainly, the use of the earned income credit seems to be in the algorithm in terms of the number of audits that have come out. But when you think about that algorithm, what I said about large changes, one of the other things to keep in mind in your tax return is maintaining consistency is helpful regardless of the actual accuracy of the categorization. So some things that you might put on your tax return, particularly if you're running a small business or you have a rental property or something where you're able to categorize expenses with different kinds of descriptions that you put down, that you write down, you might call something office expense one year on, say, a Schedule C sole proprietorship, and the next year the same exact thing for a similar amount, maybe you decided to call supplies. Well, the problem with that is, we believe, again, I don't know this for sure, but we believe, particularly if that's a large number, that might be something that gets flagged in this kind of diff algorithm, because if mechanically what's happening in an electronically filed return is that it is checking categories of expenses and changes, and you didn't actually have a significant change in the amount from one year to the next, but you just changed the category label, that could also flag something in the algorithm. So for that, and the other thing I would say is that, people could get into kind of esoteric arguments about, should it really be called supplies or office expense? And my answer would be, I don't care which one you call it, but be consistent from one year to the next, because the consistency is actually what matters more than exactly what you call it. And so I think that's an important piece. I think, there are some other kinds of nuances, again, that we have to guess, like what kind of matching could the IRS do potentially? We don't know that they do a whole lot of matching on everything. We know certain things they match, like wages on a 1040 and mentioned 1099s and things like that. But like if you are filling out a return for a business, how much matching do they do between the W-2s you file for your employees and what you put on wages as a line item on your expense? That's not clear to me how much matching they actually do on that. But it seems reasonable that you probably want them to reconcile to each other because the IRS does have that info. And so while I don't know how or if they match it, they certainly could be matching it. I mean, they could, right? It's possible, right? So I think that's the way I think about it, is without knowing specifically exactly what matching they always do. I think about, well, I can't say they for sure do certain matching, but I know they could do certain matching. And so I want to kind of keep numbers agreeing with each other that you would think should agree. And, even if they don't do matching from a flag standpoint, if your return otherwise gets audited, that, the whole audit process is going to be a lot smoother if you're not having to then at that point kind of figure out or explain differences between line items and other information the IRS could pull for the purpose of that audit, right? So just because it may not be an automatic flag or there's not a computer system matching it, doesn't mean that information wouldn't be available in an actual detailed examination, right? So, so I think I think what people kind of have to appreciate is, I think people would be surprised how little data how little detail the IRS looks at a macro basis. But then if you are audited, on the flip side, there is a lot of data available on the micro basis, right? So I think that understanding that dynamic is important. So yeah, those are all just my thoughts about all of that.
Yeah. And I like to echo what you said, Ty, because I really like the idea of just getting the heads up, because I think that's right. A lot of this listing is the truth is that you just know that to have the documentation to support it, know that could be the things that they're looking at. And so if you are qualified for it, you take it, you should take it. Don't avoid taking it because you're afraid of an audit. Just be prepared that you have that documentation for support. And I think that's great advice on that. So I guess you have our next article, Ty.
Yeah, so the article I was looking at is about Elon Musk being forced to admit that he did wrong and pay fines by the SEC, and this led to him referring to them as bastards. And so that's add some flavor and fun to the finance community to get that kind of spirit coming out of the business world in dealing with the SEC, right? I think that's why Elon is so fun to cover, is that kind of thing. But the controversy here, or the issue here, is that he, back in 2018, was kind of free-forming on Twitter and musing about his potential of taking Tesla private, and that ultimately potentially had impact on valuations of the stock, or affected the stock market for Tesla. Ultimately, he didn't take Tesla private, but the fact that was being discussed, or being discussed in that way, made the SEC say, he was affecting the market and he was releasing internal information in a way that was not accordance to the regulations. And so I think, really the issue at hand is that, and it seems apparent from everything that Elon has said in the media about this episode and about his feelings across all of this, is that he doesn't seem to think that his speech should be regulated, that he should be able to freeform about, his what he might be thinking about doing with Tesla, or, we heard this week about his investments in Twitter, and so we'll talk more about that later. But it seems that Elon doesn't think that speech should be regulated, and he kind of approaches it kind of from a free speech standpoint, right? But on the flip side, I mean, the reason that speech in that nature is being regulated is because how it is not in an attempt to prevent people from saying what they believe or what they feel, but in an attempt to make sure that there's equal access to information, right? The SEC regulates disclosure and speech, not to not to silence speech or not to censor it in that way. They regulate it to ensure that everybody has fair access to whatever speech that's being provided, whatever insider information may be revealed about a company. So yeah, I guess I would throw that out to you all of kind of what do you think about this discrepancy between the SEC trying to regulate what Elon or anyone does in that fashion, and his view that he shouldn't be regulated, and that the SEC are, as he says, bastards for forcing him into paying a fine on this issue.
Well, I mean, I kind of see both sides of it, because on the one hand, I think people shouldn't get financial information from Twitter. They shouldn't decide whether to buy a stock or not based on a sentence that Elon Musk tweets out. They should be using actual financial reports and research and whatnot to come to their conclusions. But on the flip side, I don't think that Elon should be saying things that are going to incite the stock market just for the sake of influencing, his price when he buys or sells. And to kind of analyze the whole freedom of speech argument, where he says, okay, I could say whatever I want because it's freedom of speech. I mean, if we really believe that, then it wouldn't the same apply if he were to say, if I were to go say, okay, I'm going to buy a house and we're going to sign a contract that says it's going to be $1 million, and we go through all the papers, and then we get to the end and we go, oh, well, I didn't actually mean any of that because freedom of speech said that I could say that I was going to do that. And in reality, I never actually meant it. And so you could just kind of cite that. I just think it's an abuse of what the actual, like you said, it's not what freedom of speech is designed to protect. And I think that it's one thing to be able to speak your mind. It's another thing to be saying things that are designed to create movements in a stock market that you can then personally gain from. And I admit it can be hard to draw the line between those two things and know which was applicable, but it just seems like there is a difference there. And it seems like, that he was abusing that platform. What do you think, Tammy?
Yeah, I kind of went back and forth on this one, because I do think that at the end of the day, with Elon's position and his ability to influence, the things that he does say matter. And it does have people responding to it, regardless of if it's coming via a one-line sentence on Twitter or a press conference or embedded in the financial statements or anything like that. Like, his words do cause people to take action. And I think by saying something that was, you could say that he was pondering, maybe it was going to happen. Maybe he was really just kind of thinking out loud here, and there was a chance for him to do that. Or if it was a completely what if scenario and it really wasn't going to end up happening, and he just wanted to see what that would generate in terms of buzz in the media or by people, then that's unfair. Because unfortunately, by making those or hearing those statements, some people did react to it, whether that they decided to buy more shares, sell more shares, those types of things. That he does have the influence to sway people's decisions. And so even if he's doing it on a thinking out loud kind of basis, that's a rough one. I think that's hard to really kind of say that it's not wrong. I mean, it's not right what he did. So that's kind of my thought there. I mean, I do think it's funny though, then he, rather than letting it die down in the media, he just decides to, call them bastards, and it's even bigger news now and all that stuff. So yeah, he's an interesting person to talk about.
All right, well, I'll kick it back over to Charlie.
Okay, cool. Yeah, I've got an article we can talk about from MSN.com called "Toxic Company Culture is the #1 reason workers are quitting jobs," according to a survey. So nearly 1/3 of employees are considering quitting their job, and 1/4 have resigned over the past 6 months, according to a Flex Job survey. #1 reason that they were resigning was toxic company culture, with low salary, poor management, and a lack of healthy work-life balance falling closely behind. They mentioned in the article that if you're planning to leave, it's important not to burn any bridges. They said that of the workers who left, 68% of them bowed out with having another position lined up. And they suggested, continued leverage for employees. They talked about, of the top 7 factors people consider when deciding to quit a job, 6 of them revolve around the employee experience. This speaks to how important it is to have a healthy company culture with strong managers who really connect and support their employees. And, it kind of goes on and talk about a few things, but I think it's interesting because, on the one hand, it's focused on the employee experience and company culture and whatnot. And I do think that is clearly a gigantic factor in where people decide to work. I guess the ratios that they quote where they're saying, like 6 out of 7 of the top factors relate to that. I guess I have a hard time reconciling that with all the data that's out about in terms of, there's the fight for 15 and there's all these things that are boiled around basically pay. And so this article has the premise that culture is the primary decider on whether you work somewhere or not. I think that sounds good on paper, but I feel like there's a little bit more of a dichotomous relationship between where somebody's able to work at a job that maybe doesn't have the right culture, but for a pay that makes sense to them or whatever. And so I guess I want to get your guys' take on, does this kind of resonate with you in terms of, why you think people would leave a job? Is it always pertaining to culture, or do you feel like it's usually more about salary or the actual work they do, or more practical things? What do you guys think?
So I'm going to say it's all the above. I mean, I don't think that there's one reason why someone ends up leaving a particular position or a company. I think it's a combination of things. It could be the culture, it could be the pay, it could be what they were originally joined the company to do, and it's not aligning to what they're actually doing, the work that they're performing, and there's not satisfaction to that. It could be the fact that, the last couple of years, things have really shifted and changed, and people are reevaluating what they want to do. So it is, I think it's hard to pinpoint it to one thing. And if a company does think it's just the one thing, that it might lead them to doing things that are not actually going to be helpful. So like we talked about in the past, or even like with today about going down to a 4-day work week. And if you did that and you said, oh, that's going to make everyone stay, and you realize that actually that really didn't make 50% of your workforce happy because they enjoy working 5 days a week, or they like that consistency rather than the 4 days, or whatever it could be, that you really need to understand your employees and the people that are working for you or choosing to leave, why they're doing that, so you have a better understanding and have the kind of the conversation. So I think that what would be interesting is for those folks when they're leaving a company to, obviously the article did say to make sure you do leave in good terms, which I do agree with on that, but there should be a kind of a discussion or a survey done at that time when they're actually leaving to say, what are the reasons that you're leaving, or ask the question, is there anything that we could have done differently? Explore that a little bit. And hopefully the person that's leaving will be honest with you and share that. Sometimes they won't disclose anything, or they'll, say it's one thing and it's not. But I think having kind of that data point or trying to get a sense of that is really helpful. And I think that even before someone's leaving, doing, surveys with your existing employees to see how is, employee morale, what are they excited about? What are they unhappy about? But my only suggestion is if you do a company-wide survey like that, you need to take action, or you have to also share those results, because there's nothing worse than an employee taking, 30 minutes to do a survey and then really expressing what they think about the company, and then it goes nowhere. They'll get pretty unhappy about that. And that could be a reason why they decide to leave. So I think that there's more discussion here on that and more exploring as to why people are leaving. But, I think companies should be at least having these discussions right now, especially with the way that the current climate is. And there are a lot of people that are, leaving their current employer. So what do you think, Ty?
I think that last piece that you said is so critical, because I always say that as a business operator is, I think corporate culture has gone sideways with asking questions that we don't really want the answers to. And so I always say that as a business operator, in a small business, from a pragmatic standpoint, I don't want to ask questions that I haven't decided that I want the answers to. And so I think on that topic, it's like, the reality, to say that in a more positive way, it's like before you ask the questions, you have to be committed to wanting to deal with the answers. And I think that's the problem, is that a lot of times most businesses will ask questions like this because it's the trendy thing to do, or it is in the zeitgeist of the business community to be investigating and asking and showing that you care by asking, but you're not actually committed to doing anything with the answers you get. I think that's terrible. I think it's better just to admit to yourself that you're too busy. For me, sometimes I think it's fair, it's fair to say there's probably some questions that I could be a better person and a better manager and a better business operator if I both cared about certain things and asked the questions about those things. But I think it's pragmatic to be self-aware enough of myself to say, you know what, I don't have the time right now to deal with the answers if I get them. So I'm not going to stir that pot and ask those questions, right? And I think that, that's not I think what I'm saying right now, a lot of people will take exception with. I don't think that's a popular thing in the business community to say, but I think that's the reality of that. But I think on the other piece of it, when you talk about, to Charlie's central question of, their proposition that people are leaving jobs primarily because of toxic cultures rather than pay, do we really think that's true? I would say, no, I don't think that's true. I think that there's a graph here. And on one axis, you've got pay, and on one axis, you've got culture problems. And I think the graph is different for every person. It's different by industry. It's different by company. But I do think that, I think you can put cultural problems or toxic culture. You can have extreme toxic culture where the things going on, it would be immoral and it would be unethical to argue that anyone should stay for pay in those extreme situations, right? But if you set those aside as outliers and you just say, your common run-of-the-mill bad culture, toxic culture that goes on, I think people do stay in toxic cultures because they get paid well. I think that happens every day, all the time. And so I think if you look at that graph, you would say it's a question of, can you have a toxic culture but cause your team to stay by paying more? Yes, you definitely can to a certain extent. I think the graph goes like this, right? And as that toxic culture, as the problems with toxic culture go up, you get to a point where more pay isn't going to help you, right? So there's a point at where it levels off and more pay does not help. But I think between that point and kind of basic toxic culture issues, I think you can bridge the difference with more pay. I think as a pragmatist in business, I think you see that happen every day of the week, all the time.
On the flip side of that tide too, it's like you can see that where you have really great culture or really great, someone really resonates with the company or the mission or the values, and they may stay longer even though they're not getting paid well. And so I think there's a graph that shows that as well. So it is an interesting kind of conversation piece where there is kind of, you want to try to find somewhere in the middle between probably all of those things where you're paying your employees what they deserve and what the market rate is and what your company can afford. And you're also providing the culture and the environment for them to do well and to feel successful in their employment. And so
I want to highlight that what you just said there, because basically what you're saying is there's an inverse graph, right? You could plot it the other direction and say, take it a different way and start with the proposition that maybe our business can't pay as much, right? For whatever reason, maybe the kind of business we're in, maybe we're particularly going through a hard time. Maybe we are in a nonprofit that doesn't pay as much or whatever that is. But we have a lower than average pay. And the question is, can we make up for that lower than average pay with culture? I think that's right. However, I think more small business operators think they can do that than they can.
Well, they think they can do it for longer than they should. Yes. And
yes.
They can.
Yeah. I suspect, with no data at all, pure opinion and shooting from the hip, I think the graph of making up for culture with pay is actually more forgiving than the graph of making up for pay with culture. but that's my ad hoc opinion.
Well, and I think you're right on that. And I think that's a thing that's changed over time. In the beginning, when it was all novel and new for people to be having like beer in the fridge at the office or like a foosball game on the floor, then when you had a bunch of crap jobs and then you saw that, suddenly it was a big appeal and you wanted that, right? And then as that became more normalized and more places offered that, then it became a little bit of the norm. And those kinds of things that used to seem like a crazy perk benefit are now standard. And they just also lost appeal because at least I'll speak for myself here. A lot of times those things that we look at as culture end up being not meaningful practically because the work or the job is demanding enough that it doesn't matter if there's a foosball table downstairs because you're never going to get to it. And so things like that, I think, are, I think you're right. People get those ideas in their head and they have this vision of how this new modern office would look and what it would do. But what people actually want is not often in line with what that vision looks like. And so, yeah, I think these are a lot of good points.
So, but what this inspires me is kind of a radical proposition, right? In the sense of, because we're thinking of it like what you just said, Charlie, we're thinking about it in the office environment, which I think is right. And I think what underlines my cynicism over how those two graphs would compare, culture to pay versus pay to culture, what underlies my cynicism in that is the assumption that we're talking about kind of professional level employees with kind of a certain scale of salary. When you think about like that typical, like that kind of tech firm culture, like we've got the foosball table and we provide lunch and all that. Let me throw out a radical proposition here. What if you were running a pizza joint and, or a fast food chain or something like that, and your workforce made minimum wage, and you had like this back room that was only for employees that had the foosball table and the free lunch and the, and all these kinds of things. I mean, we don't see that happen, right? But if that were to happen, I think now there's a scenario where culture might actually make a much bigger difference, right? But I think it's because of the company's financial commitment to that culture versus the overall kind of wage base of the employee base that you're dealing with. I think that actually can make a difference in how that kind of plays out.
I think that's totally true. And then just last thought I wanted to add on to this is that the idea of what is toxic is completely independent. I know that there's a lot of things that are just so ridiculous that you would say, okay, everybody would agree this is a toxic culture. But I mean, I think about military type environments, for example, there's probably shouting orders and whatnot that other people would say is toxic, but then in that environment, it makes sense. So I think it partially depends on who you as a person are and what field you're working in. And so even just the premise of the article to use the term toxic is already a question mark because no one agrees on what that exactly means. And so, yeah. Do you have another article we can talk about, Tammy?
I do, and it is about our friend Elon Musk. So he has been in the news quite a bit recently, as Ty indicated. And I found an article from CNN Business that poses the question, is Elon's bid to buy Twitter a stunt or a strategy? Elon is known as the world's richest man, and he already owns several companies. So he is now looking at purchasing all shares in Twitter for a little over $54 per share, which is above the current price, which is roughly around $45 per share as of today. This comes after, like I said, an interesting week of news updates from Elon announcing that he is already Twitter's largest shareholder. He accepted the position on the board. Then he later declined it and decided not to be on the board. There's a class action lawsuit over his handling of his current Twitter investment, and of course the comments that Ty shared with us on his settlement with the SEC over the 2018 tweets. So people are really wondering, why is he looking to buy Twitter, or even if he has the means to do so? Elon has been reported in saying that his goal is to bolster free speech on the platform and work to unlock Twitter's extraordinary potential. However, some people are thinking that this is just another stunt and it's a way for Elon to obtain attention. Needless to say, everyone is paying attention to this, and some are quite worried that it actually might happen. What do you guys think?
I mean, I'm not necessarily worried that it might happen. I mean, if it happens, I don't think it's going to rock my world. I mean, I'm sure kind of the people that, feel that Twitter should be censoring certain kinds of speech and they're worried that Elon is going to reverse that are shaking in their boots at the moment. Right. But yeah, I think, I don't know. I'm of mixed minds. I mean, I appreciate his maverick style of, and the fact that, he is using his influence financially and celebrity wise to speak out against, we were talking just a minute about toxic culture in companies, but there's certain cultural things going on nationwide that are somewhat toxic. But I think I'm kind of in the center, right? Because I think about, I'm speaking to the term cancel culture, and Elon kind of maybe is standing his acquisition of Twitter could be seen as a potential buffer against this kind of ensuing cancel culture. But on the other hand, I don't know that Elon's kind of brand of total deregulation suits me either, right? So I don't. Yeah, I don't. Yeah. So I don't know. I like I said, it probably doesn't rock my world one way or the other. His desensitizing or what do we say? Making Twitter less sensitive, making Twitter less sensitive. If that's where this is going, that's what I'm trying to say. Yeah, I mean, I'm okay with that. But him using Twitter as a platform to promote or bully other folks that don't agree with his positions, I might not be okay with that in the future if that's what it turns into.
Yeah, I think that's the issue. I mean, he's had this history of having, I don't want to say issues with Twitter, but there's been controversy surrounding his usage of Twitter. So when he wants to take control of the platform in this way, it seems like there could be an ulterior motive to it. I think Twitter's a good company. I think it's probably a sound investment in terms of just mechanically, but it's just who the players are in this story that maybe caused some interest from my perspective. And I think, we saw all this hubbub about what we talked about earlier on the podcast about him talking about going private and then not having that actually play out. And here we are talking about that same scale of idea, right? And it's even more meta because it's in the vein of the actual platform that we're discussing. And so to me, it just rings a lot of bells of maybe this won't happen. Maybe this is all just, an attempt to garner attention. And if at nothing else, let's say the whole thing is just a bunch of talks that end up becoming nothing, then one thing it will have surely accomplished is getting everybody to say Elon Musk's name X number more of times. And so I think that from that angle, it's got to be a win. And it seems like that could be the game plan. That's how I take it.
I agree with you, Charlie. I think that's probably where it is, where it probably won't go into, actually take place, but he definitely got to win because everyone's talking. I mean, when I was doing some searches for articles this morning, I think the first top 10 were all about him. So it was just, it's quite amazing. Like he has, he's his own, kind of publicity person that he can just kind of do this and we'll see what happens or see if it doesn't happen, but he's out there. So we'll keep you posted if it actually goes on, or most people who are already on Twitter will be the first to know maybe before we will, but we'll talk about it.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Tune back in again next week for more business updates from the perspective of 3 accountants. And also, please check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to nonprofits. Thanks for watching.
Bye.